Good morning. Today is Sunday, August 17th, 2025, and this is the weekly Bitcoin price forecast, looking at where Bitcoin went in last week and where it could potentially go in the future. So we are midway through August at this point, and as we can see from the monthly chart, it's been kind of an up and down month. We ran all the way up to new all-time highs. We did make new all-time highs last week, and then we, kind of shot down just a little bit. Well, we didn't shoot all the way back down here, but the month started off going down, but then it hit the new all-time highs, and now we're just kind of hovering around 117. So, I mean, overall, it's been a decent August at this point. We have had some pushes up, but last week was actually the last 2 weeks have been very news heavy between interest rates and different inflation metrics that have come out between consumers and producers. And it was a very mixed bag last week, and we'll talk about that a little bit later with the news and the economic news that has come out, and kind of put some context behind that. But overall, on the monthly chart, like I said, it's been kind of an up and down. No real major direction in either way, but we are still positive at this point. I expect us to end positive this month. As we go into the end of the month, there's not really any more major news left that I'm expecting. There's no interest rate decisions until mid-September, so we got another month. So there should be some pretty clean price action over the next month, leading into the September interest rate decision. So I think we're finally starting to see the effects of tariffs come in, and we'll talk about that in the economic news portion of it, specifically with the producers index. So that's pretty much it on the monthly chart, at least. So yeah, I mean, you see the moving averages are way down here for the moving averages, so nothing even close. Matter of fact, let me I will put something else on. Put another one on. The 21 moving average is way down there too. So I'm gonna take that off. Nothing major on the monthly chart. Weekly chart. So we have hit just really, I mean, you see a stagnation point here, right? This is a very hard line to say, and 120 seems to be. So if I draw a line right there, that looks like 120 is like the line to beat. And if you can sustain above 120, then you're going to get to higher levels. We see even at 123 and 125 is going to be kind of difficult. And I have said that in the past too, that 125 would be that level to get above, just because that is, and I'll turn on the drawings in a second, that's the line to beat for, this uptrend line that we've been in. So this is, I mean, we've seen a very clean, if you look at it, if we're just looking at this from a technical perspective, this has been a very clean uptrend channel. So up, down. And overall now we're kind of at this stuck period. So where we see that, we go up and down, but 119 and 120 is kind of that line in the sand for right now. So it's been a very tight range really ever since mid-July. So it's been about a month that it's just been kind of ranging here. July was not a very big month of motion for Bitcoin, but a lot of stuff has gone on behind the scenes. So let's turn on the drawings at this point. I see a couple things. On this chart. So I update this short-term holder realized price every week. And it's been creeping up because it was down here at 92 a while ago, and it just crept up and up and up and up and up and up and up until it's now at 108,000. So you have two lines in the sand sitting right here. So you're crunched in between this upward channel right here. And as we see, that's been running for quite some time. But you're also having this slowly creeping up short-term holder realized price, which does act as a support for price. It acts as a support for price, and you also have this escape velocity line that I talk about that goes, from here to here from the tops. So you do have some very solid support underneath it. Not so much from the moving averages, and the moving averages are getting there, but just not quite yet. So we see that we're now above this line. We may even very well see some type of retest of this line. I don't think that that's as plausible at this point. I think it is more plausible that we start to see these 120s and 130s before we break out, and then just we're absolutely out of the stratosphere at that point. So it'll be interesting to see for sure. But what I can see is that I don't see us really going too far below this area, because anything coming back and touching this would be a retest of the escape velocity line, as I call it, this line that has connected the tops from previous cycles. We're now well above that. So now coming back down to this line would be a major retest that would, really send it up to higher levels for sure. Again, we talk about the weekly moving averages, right? So those are, you got your 50, 100, and 200. those are way down here. Even if I turned on like the 21, that's probably still just kind of riding this level. And actually, that might be a little interesting. So, EMA, where is my exponential moving average? So if I do this and turn that onto a 21, I've started looking at the 21 moving averages lately, and even still, that's still right here. So that adds more kind of credence to this area being a very hard line in the sand. So it's at 106, 108, so on and so forth. So yeah, 108. I don't see us really going below that at any time soon. You just have too much support there. Like price is going to rebound off of that like nothing. So yeah, not too much on the monthly chart. I do see that we're above this bull flag at this point. Even if we pull this right here. So even if we pull this right here, we see on the daily chart, I've moved down here now. You had a run up. You had this major run up down here. We talked about it going back down to 110. From 110, it ran up to 123. So that's a 13K move in, what is that, the 3rd to the 13th? So in 10 days, it ran up 13K. So you're looking at about $1,000 a day of this running up on average, right? And from what you see here, we came back down to this line, which is, a very, if we look at that, a hard line in the sand, right? So we see that price bounced off of this and bounced and bounced and bounced, and then it finally broke below, and then it came up above. It stopped here for a second, and then it just bounced and bounced and bounced. So what that tells me is that 117 is 117, 118. That's a pretty hard line. So even coming back down here, we saw this violent move down. It had to stop at this area because like that was a key level for this price action. So what I suspect is that at worst we see it come back down to about 114, and then we could just continue on to the upside. I keep talking about this upper area here, which now we're looking at about 130 if we just go directly up here. So 128, 130, that will be a pretty hard area to break. And then once we do that, it's I talked about us being in uncharted territory once we broke above that escape velocity line, but this is very much so the hard line in the sand because we've been in this range since October of 2023. So almost 2 years we've been in this range of bouncing up and down. But as we can see over time, there's several metrics that are pushing it to a higher level. So moving average is sitting right here at 115. That's your 50 moving average or 100 moving average is at 110 for the daily chart. And then your 200 EMA is at 102. So what I'm saying now, it is going to be extremely hard for us to get below 100,000. So like there are people who are like, oh, Bitcoin's going to crash to 50,000 or 75,000. I just don't see it. I don't see it at all. Unless there's just something catastrophic that happens, which at this point, you've had a lot of the major moves that have happened already. So getting below 100,000 is going to be a feat. It's going to be a feat for sure, especially if there is something catastrophic that happens financially. I've always said that Bitcoin is going to be a flight to safety. It's going to be something that really holds the price up. Price will hold from that area, but overall, here are your worst case scenarios, right? So let's draw them out. Let's draw them out right now. So you come down to this moving average, and then you come up, and then boom, 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 boom. Or you could just do this. I mean, it could have already ranged here, and then you just come up, and then I just think overall, here's what we're looking at. I just think that's the overall motion that we have. And then once we get here, that's going to be another area to be determined. So TBD. We just see that has been a long-standing area here. So let's look at the 4-hour chart just a little bit. There's not too much to talk about here, but we see also here on the 4-hour chart, you have all your moving averages are clustered right here. Your moving averages are clustered right here. So you have your 200 that's protecting it. You have this 117 line in the sand. You have now this area down here, which also could be looked at as a support because you have 1 tap, 2 taps, 3 taps, 4 taps, 5 taps, 6 taps that could come down to this area. So overall, the direction is up at this point. And this area was due to some news that came out on, what was that, Wednesday morning? Wednesday morning, somewhere around there. But yeah, I think on the chart from a technical perspective, that's pretty much all we need to look at. So like I said, overall direction up. Economic news, right? So last week you had a couple things. You had the CPI, which came back at well, it came actually a little below what the expectation was. So that's good, quote unquote. Core CPI, that is a that's the consumer price index, but they take out food and gasoline because those are a little bit more volatile. We have actually, it met expectations, but it did go up, and it has been going up for the last 2 months actually. So for June, July, and August, we have seen well, I guess this would be May, June, and July data. We have seen an uptick in core CPI after it had been coming down and kind of ranging for really most of 2025. I think it's kind of a delayed effect of tariffs that we're kind of seeing, but just these small upticks are actually pushing the inflation a bit. So core CPI takes out food and gasoline, like I said, and food and fuel, which those are the more volatile ones. So seeing that this goes up, that means that everything else is in fact getting more expensive based on the numbers. And they have adjustments and whatnot, but overall, that's something to see for sure because that's your underlying inflation. The other one that was actually the big shocker was the core PPI. So the forecast was the previous month was 0 for, I guess that would be June. The core PPI came out to be 0.9%. The forecast was only 0.2. So that is a 350% increase, 4.5x, based on what the forecast was. And I'm telling you, that's actually pretty significant. And the reason I say that's significant is because this was so far off of the forecast that it's almost unprecedented in the last several years. So, I mean, if I even keep going back, let's keep going back and back and back. The yellow dots are the forecast. The blue dots are the the blue dots are the number. So we see like the yellow dots, they've kind of ranged here around like 0.1, 0.2. You see a couple here. This is post-COVID, right? This is post-COVID that were up here. So that's to be expected. You had a lot of money flowing through the system, but it came back down to get to this 0.1 or 0.2 level. We see that 0.9 is really a huge outlier. That's a huge outlier relative to the forecast. And I'd like to sit down and do the math to see exactly how big of an outlier that is. But the last time you saw something this high was 2008 or December of 2006. And we know what kind of happened after that. But you had a huge spike here based on the forecast. So it's interesting to see that it was that far off. And we did see the NASDAQ start to dump. We saw the NASDAQ start to tumble after that. We saw crypto and everything start to tumble after you had that huge core CPI. So normally that's not anything that is a huge driver. But when you have something that's this far outside of the bubble, it does become significant. That becomes significant, and it becomes something that you have to pay attention to, realistically. So, that was the major news for this week. Everything else is just kind of, copacetic. Nothing major coming out this week. Next week, some FOMC unemployment, but, that's nothing major. Jackson Hole is next week with the Fed. So, I mean, you could get some interesting data out of that. So, one thing that has been the major driver for Bitcoin and everything has been the Bitcoin ETF flows for I guess since January of 2024, so almost 2 years ago. You can see here who were the major ETF holders. So you have BlackRock, Fidelity, Bitwise, ARK, Invesco, Franklin Templeton, Valkyrie, VanEck, Wisdom Tree, Grayscale, and I guess Grayscale or whatever. So this is a conversion, something that they did. But anyway, you can see what they did. Here are their fees, and then in millions of dollars, this is how much has flowed in. So black numbers being the inflows and red numbers being your outflows in parentheses. What I'm looking at is the average. So in total, right? And this is overall. We see this data right here only goes back to the 29th, but they have been summing this up over time. So BlackRock has put in $58 billion. That's $58 billion. Fidelity is next at 11 billion, so on and so forth. And Grayscale has been bleeding out, but I think that was the purpose from the start. They were converting their trust to an ETF. But we see these are the big players, right? So Bitwise and ARK, but Grayscale 58 billion. So you have people pouring billions and billions of dollars. What I'm looking at on average is what is their average daily spend on this? So you're pumping in 100. BlackRock is at least $100 billion. No, is that million? Yeah, 146 million a day on average. And there's some days that are higher, some days that are lower, and this is averaging everything out with the negative and the positive. Their biggest day was 1.1 billion. Fidelity doing some similar, so 29 million, 5 million, so forth, and it gets down to 300,000 stuff like this. What I'm looking at is the average total for the ETFs is 137,000. Obviously, BlackRock leading the charge here with them having the majority of this. So 137,000. Let's do this. So 137 million. I'm sorry, 137 million is the average spend for the ETFs for the day, on average since they've come out. And let's say that the average buying price for Bitcoin was 90,000. I don't know what it is, but we're at 118 right now. But I think maybe the average price between here and there has been, 90K. That is them purchasing 1,520 Bitcoin a day. There's only 450 that are produced a day. So what I'm saying is they're buying on average 3 times the amount of Bitcoin that is produced per day. Now, of course, there are people selling, there are people doing all of this other stuff, and people are selling. They're converting their actual spot Bitcoin to Bitcoin ETFs and Bitcoin holding companies like MicroStrategy and things like that. So there is a bit of a rotation out of spot right now. So I mean, there may be a little bit more available. But what I'm looking at is you have the supply on exchange that is in free fall. You have ETFs that are buying 3 times as much Bitcoin as being produced per day. You have Michael Saylor and other people who are, these Bitcoin holding companies who are buying Bitcoin at an unprecedented clip. Eventually this is gonna hit the fan. It's gonna hit the fan, and then the reason I believe Bitcoin is gonna keep rising is just because we're talking about simple supply and demand. We haven't seen anything like this to where there is an actual scarce asset, and there's only so much of it. So again, you have just ETFs alone buying 3 times as much as is being produced per day. You have all these other players that are now piling in to get their hands on this stuff. So it's interesting, right? ETF flows. This is just kind of a visualization of this chart. So this is from the block. What I'm looking at is the net positive days. So we see the time above the line, that's your positive, and then you have negative. And actually, let's go back here for a second. Let's go back here. They have some charts down here that were pretty interesting. Cumulative flow. We see this is a straight line. That's a straight line. You have some dips, right? And, little dips here, which coincides to in February when Bitcoin's price went off. And now we see that since April, Bitcoin really has had that rise too. So looking at that. Bitcoin spot ETF cumulative flow. We see that the cumulative flow at this point, the total flow in billions, again, 59 billion. It's been an overall uptrend. And the last thing, I mean, this is a year to date. Well, not year to date. This is the last year that we've looked at, last 12 months. So we see in at middle of last year, it was very quiet across the board. October and November election happened. Things really picked up. We saw that, hey, okay, well, we're going to get a pro crypto president. That is important, right? And then, the buying slowed down at a certain point, going into February, major sell off in late February. And then a period of quiet coming into tariffs in early, I guess, April. And we see the buying has just absolutely picked back up. Slowed down a little bit as of late. But it did take a huge pickup during that period. So very interesting to see. And we can zoom out even further to see that, this early selling was Grayscale, the GBTC. That was Grayscale early on. So this really kind of balanced out here. But we see the selling has absolutely abated. We've seen the selling has just completely fallen off. This was neutral territory, huge buying territory, selling territory, huge buying territory, and so on and so forth. So, I mean, as always, Bitcoin ETFs are going to be a major driver and a major force in this market, but it's just interesting to see how the ebbs and flows happen. But overall, like I said, the huge driver is that they've been buying so much more than what is being produced per day. And all that's going to do, we talk about supply and demand. Supply and demand is real in Bitcoin. And it's something that will, because you can track it. There's no way to lie about it. There's no way to lie about the supply and demand. There's no synthetic shares. I'm not saying that there aren't, because I'm sure that they're doing some type of paper manipulation somewhere. But, overall, it's pretty hard to cheat the system here, especially when the system is being audited every 10 minutes. It's kind of hard. So That's pretty much it for today. Interesting times ahead for sure. I think we'll see a great end of the year for Bitcoin. I absolutely believe that we'll be somewhere around 150 before the end of the year. Again, my original projection was 250. I think that's becoming less and less likely per day. This has been absolutely a slower cycle than the previous cycles, but we're in a period of transition. We're in a period of transition right now with the financial system. There's been a lot of movement on the financial front between laws and different regulations and standards. So we're getting there. This has been a quiet year, but it's the coming years will pick up for sure, especially 2026. So looking at this, that's all I have to say. Also, again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com, and I will see y'all on the moon. Take care. Bye-bye.